I would ask that if the board would so please to open the meeting and make a motion, and then I'll be glad to chair.
So moved.
Second.
Well, that's kind of awkward, just saying.
Procedurally correct.
So anyway, alrighty. There's a motion on the floor by Councilmember Kloiber and seconded by Councilmember Baxter. Are there any discussion on the motion? Is there any discussion on the motion? There being none, all in favor, please say aye.
Aye.
Any opposed? All right, thank you all so much. Welcome to the meeting. The first item is the minutes for the February 1st, 2022 meeting. Would entertain a motion to approve.
Move to approve.
Councilmember Baxter made a motion to approve. Councilmember Kloiber seconded. Is there any discussion? Are there any changes or corrections? There being none, all in favor, please say aye.
Aye.
Any opposed? All right, thank you so much. And those were some really good minutes. I've read through them this morning, and I appreciate the work that you put into making sure there's some more information in there about the presentation. That's really important for the history of this, this board. So thank you. Then the next item is the third quarter expenses, and those are for information only. But are there any questions or comments on those? We're so quiet. All right, I think they are just they are what they are. They reflect the normal expenses, don't they? So there being no questions or comments, we'll move forward to the next. The ratification of the transfer of the estimated payroll for April 2022 through June 2022 in the amount of $240,000. This memo does require action, so is there a motion to approve, please?
Move to approve. Or did I hear a motion? Oh. Second.
Okay, Dana, did you move?
Yes.
Okay, all right, y'all got to speak up now. I tell you, I know if y'all haven't had your coffee, you got to speak up. All right, Ms. Hoffmaster made a motion and seconded by Ms. Lang. Is there any discussion on that motion? There being none, all in favor, please say aye. Aye. Any opposed? All right, wonderful. Thank you. Now, the next item is for information only. It's funeral benefits. Miss Margaret Matherly, bless her heart, God rest her soul, passed away on February 7th. So we'll just note in the minutes that is for information only and no benefits are due. So, and David, Mr. Calvert, you are up next. So we'll hand over the floor to you.
Okay,
thank you so much.
So, in regards to, I think everyone has a copy of the book. Very good. So in terms of the first quarter, was definitely a challenging quarter. If you turn to page 3 behind the first tab, you will see that the return-seeking portfolio generated a total return of negative 6.1%. We actually underperformed the benchmark by about 58 basis points. And translated into dollars, that's about an unrealized loss of about $1.7 million. The liability defeasing portfolio, that's all matched to the expected payouts. So in terms of, there's going to be variations in the market value, pluses and minuses, but for the quarter, that also declined in value, and we will kind of go into the details of why that particular portfolio went down in value. We were quite active in the portfolio, making some small tactical changes in the portfolio, which are highlighted at the bottom of page 3 in terms of adding some U.S. small caps and bank loans. We then shifted and had a slight overweight to equities, but then reduced it as more of the concerns transpired due to the war out in Ukraine, as well as increasing inflation pressures. So overall, the portfolio, the return-seeking portfolio accounts for about 74% of the overall portfolio. That's essentially the excess over all the payouts that would need to be made for the life of the pension fund. And then there's about 26% that's dedicated to the LDI, or the liability defeasing portfolio. And that is basically set aside to pay all the current retirees and pensions available. The overall portfolio structure is tilted towards equities. You're targeting a 60% domestic equity versus 40% within the return-seeking portfolio. We actually have slight overweights in both of those allocations in terms of the equity component, because we figure that that's going to be a better longer-term asset class than fixed incomes for the immediate future. For the last 12 months, the return-seeking portfolio generated a return of 3.49%, while the liability defeasing portfolio declined by 2.4%, with a combined overall result of positive 1.82%. So some of the highlights in the economy, behind page 7. Everyone was very shocked as Russia invaded Ukraine. As we head into the third month of this invasion, it seems more of a stalemate as opposed to what a lot of people thought early on, that Russia would just kind of like waltz right through and capture most of Ukraine. This has continued to put pressure on commodity prices. Ukraine and Russia don't represent large exporters to the United States. However, they do export goods. Russia, for example, natural gas to Europe, which then causes pressure, supply demands on natural gas that influences the natural gas price here in the United States as well. The U.S. economy is characterized by a very strong labor market. There's hundreds of thousands of jobs that need to be filled. In fact, the unemployment rate is at 3.6%. Some of the lowest levels in history. We're just a shy higher than when we were at the start of the pandemic. So all the jobs that were lost due to the pandemic have basically returned to the market. However, there is a gap about 1 million jobs where the economists are still trying to figure out whether or not these individuals essentially retired early and aren't planning on coming back to the workforce, or if there's still continued disruptions because of COVID, where a parent has to stay at home because schools open and close. Now, I think those things are transpiring and working its way through, but that might basically be rectified by the summer or so. The main emphasis is the Federal Reserve. I'm not sure it's like what news articles that you're reading, but in terms of the Federal Reserve is the highlight of all the economic newscasts, because the Federal Reserve is going to embrace a very sharp tightening cycle, one of the sharpest tightening cycles that we've seen in 40 years in order to combat inflation. And then in terms of the yield curve, yields have continued to increase because of the Federal Reserve's policy changes. So the main emphasis on the economy right now is inflation. Inflation is running extremely hot, which means that prices are escalating quite rapidly. The most recent CPI index showed inflation increasing by 8.5% year over year. If you're wondering when was the last time we've seen 8.5% inflation, you have to go back to the early 80s. So right around. So in terms of we haven't had this type of experience for more than 4 decades. The Federal Reserve was sort of caught off guard. They were thinking last year that many of the inflationary effects were transitory, meaning that, okay, people weren't working cutting down trees. Because they weren't cutting down trees, then lumber prices have gone up. Those people have come back to work, and prices are still elevated and still higher. Another area, if you're looking for a new car, that's nearly impossible. If you go down your car lots, I was looking for a new car. They normally have anywhere between 200 to 300 new cars, so that when you go there, you could pick the model that you want, the color that you want, with the accessories. When I went there, they had 7 new cars on the entire lot. So in terms of if you're looking for a new car, that's almost very, very difficult. If you really need a car because, like, let's say your car got in an accident, then they're marking up used cars by more than the price that they're suggesting with MSRP on a new car. So this has basically resulted in extremely high prices for used cars as well as new cars. That's highlighted with the used car. It only accounts for 5% of the CPI index, but used car prices are up by about 40% year over year. So hopefully, if you have a third car, might be a chance to sell it. My wife's one friend, he's a very spontaneous individual. He went to CarMax. They gave him such a great deal, he sold his car, not realizing how he's going to get back home. So he got Uber in order to go back home because he didn't have a vehicle at that particular point in time. Just strange things. But in terms of, it's difficult if you're looking for certain goods and services, and you just have to be more patient in order to get a good price. So we're on the waiting list. I think our vehicle is going to be manufactured in Alabama and be shipped, but it's essentially 4 months in order to wait for a new car, unless you want something.
I mean, I do remember that back in the 80s. I mean, sometimes when my parents did get a car, they did have to order it. I mean, that was
I
back
can
in the day.
remember that.
Yeah.
You know, people ordering cars.
Yeah, and if you're not willing to wait, you're paying thousands of dollars above MSRP.
Might as well get a bicycle, huh?
So in terms of, that's also translating into shelter. In terms of cost for rent has increased sharply, as well as in terms of if you're looking for a new house. It's like just at the end of last year, mortgage rates were in the 3.5% range. My poor sister-in-law, she was looking for houses. She got outbid on 4 houses, but she finally was able to purchase one. But now mortgage rates are in the 5% range. She's got a mortgage rate of 5.375% compared to the start of the process, which was 3.5%. So now you're just paying more to the bank, as opposed to being able to use that money in order to buy a bigger house or more affordable house. So inflation is running hot. The Federal Reserve has now basically conceded that they need to do something in order to reduce inflation. They feel more comfortable doing so because their dual mandate is in order to maintain full unemployment, which at 3.6%, we're at full unemployment, but inflation needs to be in check. So this chart on page 9 shows what the Federal Reserve has been telling the markets over the course of the last 12 months. In March of 2021, the unemployment was at 6%, and the 2-year Treasury note was at 16 basis points. Everyone, and including the Fed, said that they weren't going to raise rates at all in 2022. Now, looking at March of 2022, the unemployment rate is at 3.6%. The 2-year Treasury note is at 2.34%, and the Federal Reserve in March is saying that they're going to raise rates by 7 times. So instead of rates being in this paltry 0 to 25 basis points, we might at the end of the year be in this range of 2.5% to 3%. And that's what the markets are already anticipating. And if you're looking at discrete securities such as U.S. Treasuries, that's already what's being priced into the market. You're not seeing it at the local banks yet in terms of CD rates, but in terms of if you went out and bought U.S. Treasury security, you could get one at 265 yesterday. So a lot has been talked about Ukraine and Russia. Here are some statistics in terms of Russia is only the 12th largest exporter. Ukraine is the 58th largest exporter. The economies aren't that meaningful to the domestic U.S. economy. However, you're going to have some transitory effects in terms of if you follow Netflix had a net subscriber loss. And the reason why that they had a net subscriber loss is that they actually cut off Netflix to all the Russian consumers. And that was basically 700,000 accounts that they turned off due to the conflict. Which then just has impacts on, okay, if you own shares of Netflix, now it declined, and you're hurting from that, but that was due to the Russian conflict, because it's like they're not showing as much of a growth trajectory. Prices across the board have increased in terms of gasoline prices, at least have kind of stabilized right above probably the $4 per gallon, but there was a time period where it's like you kind of saw gas go from $3.40, and the next time he goes to the pump, $4.20. So in terms of, I took a picture when gasoline prices were at $3.99 and said, we might not see $3.99 again for the rest of the year because how quickly that upward trajectory was occurring. This is not just isolated with gasoline prices, wheat prices. Ukraine is an exporter of wheat. You can see that wheat prices are up about 31%. Copper and aluminum prices are up also pretty significantly. So if you're trying to build something, it's just much more challenging than what we've seen before. going to skip the next page on 13. This is just the dramatic effect on fixed income securities. When we're talking about the liability defeasing portfolio, the sharp increase is the reason why the liability defeasing portfolio saw a decline in market value. It is also a significant component of the return-seeking portfolio that accounts for about 30%, and that is also a drag on the overall portfolio returns. These returns, even on the short end of the market, are worse than 40 years, once again. In terms of you're going back to the beginning of these indices in the late 70s in order to see returns similar to this. So in terms of it's just been a very challenging environment that was not at all anticipated 6 months ago when the Federal Reserve was saying that they weren't going to raise rates. And you can see that on page 14. The histogram on the left-hand side shows the negative returns on fixed income securities. That big bar on the right-hand side, the only time that was equaled was in the late 70s time frame. So just other things in terms of yield spreads, there's just a little bit more increased risk in the markets. Corporate yields have widened out a little bit. Other products such as mortgage-backed securities and asset-backed securities have also seen a widening of spreads, which also hurts performance. It just represents that there's increased risk in the market. And probably the last couple of years, there's been kind of euphoria in terms of you saw the stock market go up every single day. If there was 2 down days, wow, things are like in a panic. Now it's basically 2 down weeks, 3 down weeks. It's kind of a normal course, at least for 2022. And then slide 16 shows where the Federal Reserve thinks the federal funds target rates ought to be. As you can see that there's quite a disparity, a dispersion in 2022. Some thinks rates might go up only to a range of 150 to as high as 325. So there's a lot of uncertainty. If you want to put a date on your calendar, it's May 4th. May 4th is when the Federal Reserve is going to meet, and the consensus is that they're going to raise rates by 50 basis points, which is the sharpest increase in about 10 years. And then they have 2 other meetings over the summer where the markets are thinking 50 and maybe even 75 basis point increases as expected. So here are the returns. Yes, we're focused on the last quarter, which was negative, but if you look at the last year, the S&P 500 was up 15.6%. This is all on page 17. International equities continue to have headwinds in terms of the one index is down by negative 1.48%. Emerging markets, so those countries such as Brazil, China, their markets were down 11.37%. So here in the United States, domestic companies have performed quite well compared to the rest of the world. And then fixed income securities, which is supposed to be kind of a diversifying effect, but because the rates early on were so low, they've had sharp negative returns over the last year. So going into planned performance, return-seeking portfolio behind, let's just jump all the way behind tab 3. So that's the planned performance. You can see the highlights here, very top row. 1 quarter return was down 6.1%. Over the last year, we were up by 3.49%. Over the last 2 years, the annualized return was 18.3%. The last 3 years, it's up by 10.59%. So yes, we've had a difficult quarter. There's a lot of things that were occurring. Essentially a transition stage from it's like, okay, we've kind of fully recovered from the pandemic and we're experiencing a V-shaped recovery where it's a lot sharper and a lot stronger than a lot of people were expecting at the onset of the pandemic, where it's like, okay, when will these jobs return? If you go to the parking lot on the airplane, they're actually greater capacity than prior to the pandemic. People weren't as concerned. It's like, I was shocked when I parked my car. It's like 2, 3, 4 months ago, it's like half the parking lot was empty. Now it's completely full on Monday. So it's just a lot of people just want to kind of go back to life as normal, getting on cruise ships, going on vacations, and willing to spend money. And it doesn't matter what they have to pay because they've saved so much money over the last 2 years due to the pandemic. And it causes more inflation. So just a lot of impacts. And it's like you can see that all of the various sub-managers. It's like we're just not in one single asset class. We're looking at different types of investments in domestic equity. We have several active managers, but the hallmark is the Vanguard Total Stock Market ETF, which is a passive index, and it accounts for about 60% of the domestic equity allocations. Any questions on this page? There's a lot of numbers, but it's like in terms of just subdividing it from asset class to asset class. And then behind tab 4 is just the periodic update for the liability to season portfolio. Every quarter you approve the benefit payments, and that's where the funds come from. So in terms of, that's going to continue to decline. It's like it's about $9.7 million. We look at your actuary estimates every year in terms of making sure that investments are aligned to your projected needs. But essentially, it's a asset liability strategy where it's like, okay, we know your liabilities and we're matching maturities up to those liabilities. And it's of extremely high quality in terms of all investment grade securities, BBB or higher in regards to the portfolio. Any questions?
Just real quick, you said you were doing some trading in the term of the quarter. Are we only having the final investments here, or do we have the interim investments as well and their performance? As in, like, what you sold off and if we were able to capture any losses or anything?
It's not in this report. It's in the standard monthly reports that are available in terms of, I could provide that to you. So in terms of,
I just wasn't seeing where we had any exchanges as opposed to just where we ended up here.
Okay.
So,
Okay. I could actually incorporate that into the report going forward. But
I think I'd be the only one who was interested, so don't
okay.
don't worry about it.
Okay. Now, in terms of, along with this package, this is more for the board, but in terms of, we have comprehensive monthly reports that are, I'm not sure actually who reviews them, but like they're available online.
I'm sure finance
exactly.
does.
I think Chad gets one.
Yes,
Yeah.
I'm sure he does, yeah.
That was it. Yeah.
Okay.
Okay. Thanks. Yeah.
Okay, cool. All right. Any other questions? No? I swear this is the first time that I've ever seen any kind of a negative. I mean, in my time, I don't ever recall seeing a negative market value. I mean, this was interesting.
Yeah, in terms of, part of the overall strategy is that it's like fixed income securities are supposed to kind of have a diversifying effect, so it helps stabilize things. But right now, everything's sort of correlated in the same direction. That fixed income securities are being hammered because of the Federal Reserve, but the equity markets also don't like the fact that the Federal Reserve is raising rates that aggressively, so both are dragging down the overall performance. But if you look longer term, it's quite beneficial in order to stay the course and continue to have this diversified asset allocation.
Wow. Well, thank you, Mr. Calvert. I appreciate that very much. Are there any other comments or questions or anything about the report? No? Okay. All right. Well, as always, we appreciate the overview that you provide for every meeting. So the next item on the agenda is the update on the proposed amendment to the KRS 67A 320. And Mr. Cravens, do you have,
I mean, I can provide an update.
if you don't mind, please, I'd appreciate it.
As you'll recall, the board voted to try to request the General Assembly to amend the state statute related to the appointment of members, to allow
Yes.
the mayor to appoint vacancies because we've had difficulty getting retirees who will serve. So the General Assembly did pass Senate Bill 224, which does amend the state statute to give the mayor appointment power to fill vacancies on this board. And it's effective July 1 of this year.
We probably will need to have the Senate Bill 224 in its final form brought forward to this board so that it becomes a part of the meeting record. So perhaps at the next meeting on July 26th, we could make sure that we have a copy of that Senate Bill 224 in the packet, just so that it's in the record and that everybody has access to a copy of it. I really appreciate and value that did go through for this board and be able to carry it forward. So are there any questions on that? No questions?
I don't know enough about it to ask questions.
I wish I'd thought about it.
Yeah.
But I tell you, having a mind to remember things today is, if it's not written on a piece of paper, is it's a bad day.
Exactly.
But we'll make sure that's in the next packet so we
Okay.
can, and that'll be right after it goes into effect too. So I mean, okay.
Now, I would bring to the board's attention that there was also an ordinance change that was talked about, that
Yes.
that if the state General Assembly did approve this amendment to the state statute, that we would then amend our ordinance related to this board to kind of clarify election procedures and the mayor's appointment power with regard to filling vacancies. So I think there's been some draft language floated around. I can provide that for the packet in July, and we can talk about moving that, how that would be moved forward.
I think that would be great too, and thank you for that, because I had missed that part about it. But it makes sense that we would have to amend the code of ordinances.
I think the thought was the board wanted to see that the General Assembly would in fact pass the statutory amendment, and so now that that's been cleaned up, we can then mirror that change in the ordinance related to this board.
So then, in the July packet, then not only will there be a Senate Bill 224 document, but there'll also be a proposed draft ordinance containing the language that needs to be put in place on a local basis in order to follow the state statute.
Oh, okay.
So, and then that can be discussed at the July meeting. So, yes, ma'am.
Do we need to have that ordinance prepared and ready to vote on at the same time as the General Assembly? Like, does it need to happen effective July 1st as well? Like, should we go ahead and do it before the board meeting?
I don't think you have to, because I think until there's a vacancy actually on the board, if things are good, and there probably won't be a vacancy in the next 3 months.
Okay.
So I think what could happen is you'll have, my intent would be that there'd be a draft ordinance in the packet next time that'll kind of show you what the proposed change would be. And then if you all have approved it at the July meeting, it could then go through our legislative process and go back to council.
Okay. If I remember correctly, and Samantha, when was the last election? Was it just this? Was it 2021?
2020, so we have one coming up at the end of this year.
Okay. All right. Okay. So that would be proper timing if you three ladies one of you all choose not to be on the board again or put your name in the hat for it, then we would have the opportunity to have a different process than what we've had to deal with in the past. But hopefully all three of you all will remain constant on our board. So I hope. It is my hope. Okay, good. I appreciate that information, and then that can be noted for the July meeting. And then the update on the residual assets discussion and the compromise, Mr. Cravens, do you have information on that, or?
I mean, I don't really have an update to share. I think just to remind the board what kind of happened at the last meeting was, as you may recall, the state statute as it's currently written says that when it's time for the fund to close, the residual assets that are left in the fund will pass through the general fund to the police and fire pension fund. And that's the way, and the way it's written right now in the state statute, that contribution would not count toward the city's contribution to that police and fire pension fund. I think there was discussion at the last meeting about trying to find a compromise so that maybe instead of it saying, because the board had previously recommended having that contribution count, whereas now it wouldn't count. And I think the compromise would be, okay, if Right now, it says it wouldn't count, and the board wanted to say it would count. It seems to me the compromise would be some of it counts. And so the question would be, what's that split between what proportion of it will count toward the city's contribution and what proportion of it would not, and would be truly supplemental. So I think that's what would need to be worked out.
And after looking back through the minutes and my notes that I took last meeting, it looks like that they were going to, that mayor and I guess people from the Police and Fire Pension Board were going to come up with a group of representatives to discuss. And I don't know, does anybody know, Ms. Hensley, by chance, do you have any idea about?
I'm not aware that there's been any movement on that.
Okay.
But I can check back and see. We have some subcommittee meetings for the Police and Fire Pension Board next week? Wednesday.
All day.
Okay. So we'll bring that up.
Okay, all right, because I had asked for the names of the representatives to be brought forward back today, and obviously that hasn't been able to happen. So I hope that we can reflect in the minutes that surely by the July meeting that we would have those names brought forward, so that this board again is kept in the loop versus not being kept in the loop, period, about this process. I think it's very important for this board to have knowledge, if not a voice, at least. So, okay. All right. Thank you, Mr. Cravens. Appreciate that. Are there any comments or questions about any of the above? No? My goodness, if we all remain this quiet all day long, we'll get out of our meetings a whole lot quicker, won't we? I can only hope. All right, folks. Well, our next meeting is July 26th. It'll be a good meeting. So, and I guess then the next motion would be a motion to adjourn.
So.
All right, Councilmember Baxter, is there a second?
Second.
Council, Ms. Lang seconded it. All right, all in favor, please say aye.
Aye.
All opposed, thank you.